Investec is active in investment banking, private banking and asset management. It was established in 1974 and operates mostly in the UK, South Africa and Australia. Best known for its zebra mascot, the group has a combined market cap of 45 billion rand, a price to earnings ratio of 16 and a dividend yield of 4.4%. How do we feel about Investec? Pretty much in line with everything else in the financial sector?
Unfortunately, of the ones we're talking about tonight, it's the smallest, so it's been the most exposed to the crash. It also had the biggest business in the UK, which, as we know, has kind of been the epicenter of lots of negativity as far as banks are concerned. But it has some good businesses in there, taking a little bit of pressure at the moment. Steve Kosef in terms of bank remuneration levels. But that asset management business that Hendrik du Toit has built is a fantastic operation. They've got very good private banking and investment-related advisory services businesses. Yes, the investment bank hasn't done that well. Trading has been a bit negative. Australia, unfortunately, bad loans, some
but
high flyers.
But the asset management business is the jewel in the crown.
Yes, and that alone is probably worth what the business trades at now. The trouble is that it needs to show a new kind of trajectory in terms of profits, and lately it's been a rather drawn-out story of apologies each time the results come. There's some other, high-flying private bank client that they took a loss on here or there or everywhere.
I don't know, the market's decided on that. Craig, what are your feelings towards Investec? I would say from an investor relations perspective, they do engage the market, and certainly I don't see any skeletons coming into the closet or coming out of the closet every time they release their results, because they've done a pretty good job of allowing the market or preparing the market for any negative news flow.
I think there were slightly higher provisions from the impairments in Australia than perhaps was indicated. But yes, the communication is probably better than some of the others that we spoke about. But impairments are always difficult to predict beforehand, and I think one needs to make a decision pretty much when the financials are ready. But the UK and Australian operations, particularly because they've got this property division, Kensington, which they brought in the UK, and it's property that's really been difficult. And hopefully when that cycle turns, that will help. But I think the business is focusing, as Paul says, very much on asset management. They made 2 acquisitions in the asset management division too. But despite those acquisitions, only managed to grow profit by 5%. So it's not exciting, I think maybe there are questions that Stephen Kosef needs to ask. Is it time to maybe step aside? He's been there. It's 10 years ago, in fact, since I last owned the share, because shortly after they got the dual listing and I ended up getting the INLs and the INPs, I sold out, and I've looked at it many times since and never seen an opportunity to want to get back in.
But let's not forget that they have been buffered by that negative sentiment that has been plaguing Europe and the UK, and that may be the reason that we're not seeing the value unlock coming from Investec.
Absolutely, and at 50 Rand a share, it's relatively cheap. It hasn't run up like those others we were looking at earlier. So if you've got an appetite for this, if you think that the banks in due course will overcome this, remember what I said about Standard Bank emerging from the wreckage of the Russia blah blah blah. It went from 12 Rand a share to 100. In a positive environment where banks are getting their mojo back, this will be the kind of high beta stock that you could look at.
Hot or not on Investec?
I'd still avoid it. I'd avoid the whole sector for now, but it has its appeal. But
Enough
not
said.
hot. Not hot.
Craig, hot or not on Investec?
What's interesting is it's about a 5% discount to NAV. All the other banks are about a 50% premium to NAV. It's got a good dividend yield, so there is scope to look at it, but I'm still going to say not hot.